Well, excuse me. Welcome everybody to the May 2025 WITI Link SV Friday Lunch and Learn, first Friday of the month. But we normally but we've, if it comes on the first or second, we got to give Dawn a little time to do her magic. So thanks for being here. We have some special announcements at WITI too. I'll share once Dawn's done. So Dawn, over to you.
Much, David, and good to see everyone again. So this is our April recap, and April was a busy month, but not quite as busy as January, February, and March. The numbers here are a little uh, surprising. 9.6 billion. That's about little over two times what we saw in April of last year. One very large investment for 4 billion plus bumped that up. But the standout note here is the number of companies. We dropped by 40.
Don, they're having trouble hearing you.
Oh, okay.
Yeah, just speak up, that's all.
Okay. Just speak up. I can also
Yeah.
check my. Oh. Okay. I will speak up.
There you go.
So less companies. The total, as I said, two times larger than last year, and a little bit larger even than 2021, which was the uh very very it was a time when lots of money was being invested. There wasn't a lot of due diligence being done, and we saw more fundings than we've seen at any time before or since. So this number takes us to 75 billion plus for the year. We're obviously going to break what we did for the total of last year and probably the 2 years before by the time we hit December. So we'll talk a little bit about why the trends we see and why we have dropped in the number of companies. And of course, next month we'll see if this is a one-off or more of a persistent trend. So let me move ahead here to the breakdown by sectors. That one big order I mentioned was a little over 4 billion to Altera, an Intel-owned company, semiconductors, and private equity came in and made a very big investment there. And you can see from the size of the semiconductor sector, there were a couple other small fundings, but that dominated the month. Now, two other points to see on this. One is this is the first month in a while that AI hasn't taken a very significant chunk of the total funding. It's there. There's some big fundings that we'll look at, but it isn't dominating. FinTech came back, big round two Plaid, 575 million, push that higher. And then, of course, we look down at software. And here's where you're seeing the AI dollars go, because that AI sector is pure AI. That's the infrastructure, that's the tools around the infrastructure, that's the compute. Now we're getting into vertical AI, the applications of AI in particular markets. We're seeing more vertical, but there has been also horizontal. And much of this now oriented towards enterprise sales. So let's take a look at the big orders we saw in the last month, the mega deals. So for anyone who's new, the mega deal means that more than 100 million was invested in one company in one round. And we had 19 of these this month. Sort of counterintuitive to what I said earlier about less companies. But these large orders, funding is a trailing indicator. So most of these large orders did not close, say, in the last week of April. They may have closed weeks before or even a few months before. Companies, when they close their funding, make their own decision based on their own criteria of when they're going to announce. Sometimes we find them before they announce, sometimes we don't hear about it till after they announce. So, mega deals, and interesting here, they're spread around pretty evenly. We saw two clean tech deals, Caban Systems and Mainspring Energy, multiple in the fintech arena, Plaid, Verifone, and of course then down into the vertical AI. And you see from Hammerspace on down, you've got security, you've got data storage, persona, ManyChat, exactly what you're seeing here. AI being applied into different areas. Some of these horizontal, most of them vertical. And over on the other side, we've got the usual in biotech, science, neurona, and glycomine.
Hey, Don, before you leave this slide, I'm intrigued with the fact I see three F, go back. I
Yes.
see three F rounds and a bunch of E rounds, which we hardly ever see. And what intrigues me, David, is that I think all these late round deals are out there waiting are going to are hoping, but I think with AI, all money is going to bright shiny new objects, and so I think all these later rounds are unfortunately are going to get crushed and get ground up, and a lot of people will be looking for jobs. So when I see Mainstream Energy as an energy, there you go, Joy, an energy company raising 258 million, there's hope for the energy sector. But boy, it's going to be tough for these companies to raise later stage rounds against the threshold of AI, in my mind.
Yeah. A note on that, Bob, is many of these companies are, even the later round,
yeah,
are featuring AI in their funding announcements.
Well, they have to.
Yeah, they just have to.
Yeah.
And that's a good point. Most funding announcements today, whether they're seed, whether they're Series
Right.
F, feature AI in some way. They're applying it here, they're applying it there. They have restructured to put it at the foundation.
But you have schooled me, Don. It can't be cosmetic. It better be embedded and better be important.
They make it sound like it is both embedded, important,
Right.
and a huge step up for them.
There you go.
Yeah, yep. The only place, incidentally, that we don't see AI prominently featured in the funding announcements are payment systems, are fintech. Now, a few of the larger, Plaid, Square, Chime, have been featuring how they are implementing AI in this and that and the other. The smaller fintechs don't. So we'll be watching that to see how it evolves. So I wanted to talk just a little bit more about the AI company fundings because 6 months ago, this layout would have been heavily leveraged into the top 4 areas or top 5 areas. Now we're seeing less of the infrastructure and we're seeing much more on the agents, the applications, on the vertical AI. We're going to continue to see compute. There's simply no way around it. The need for faster, cheaper, more power, more data centers, making data centers more effective and efficient is going to continue simply because of the growth, continued growth, the explosion of AI. And we talked last time about how there are hundreds of billions of dollars being invested into data center projects, into the infrastructure for more power to go to data center projects. That's going to continue. What we are seeing a little bit more of now are, under the LLM tools, our differentiation of LLMs. specifically towards getting models that are faster, more effective, more efficient, cheaper to build, faster to build. As a matter of fact, yesterday, we got a funding in for a company called Fastino, which has now introduced what they call a task optimized learning model, TLM. And the open source folks have the SLM. So we're going to continue to see that develop. But you'll note here we have no companies funded that introduced foundation models. And that actually, again, first time in a number of months. And David, please stop me if there are any questions. So women-led companies, this month, there were 2 women-led companies that had later stage fundings, and that bumped our number up to 453 million that was put into women-led companies out of the total 9.6 billion. So that's still a modest 4.7%. And you can see over the last couple of years, this is a 3-year layout, we pretty much stay between the vaunted 2%, which is typically what most of the pitch books, Crunchbases put out there as the norm for women-led companies, but we stay between 2 and 10%.
But Don, if you want to feel a little better about it, just extrapolate out the 4 billion that went to one company. Now it's 10% or whatever. So give them a break.
Exactly. I mean, that big 31% was a $1 billion funding.
Yeah. So there you go.
A woman-led company. So
right.
It's the later stage. It's the women who are leading the companies and the number of women who are leading the companies that have a lot of influence. We still need more women CEOs, no question. Right. And just to touch on a couple of those companies, these, Bob, you pointed out the Mainspring Energy, that happens to be run by a woman.
Oh, okay.
Shannon Miller, and she's led that company since founding.
since 7 rounds ago, yeah.
Yeah. Yeah, and over on the other side, we have Caban Systems. This is 123 million. Now it's private equity. Think of private equity as going to companies that are typically profitable and can be made more profitable. So it's something usually that comes after your Series C, D, E going forward. The other 3 companies here, they're young, they're early. They just caught my eye. Over on the right, Refibered, this is like the 3rd or 4th company we've seen in the last year that is trying to come up with a method for recycling textiles, clothes, the materials that make clothes, if you will. And over on the left, Pax AI. Interesting story here. The woman and her co-founder worked at Flexport, a couple of other logistics companies, and noticed in the course of their work that there was a real gap in software that would easily enable companies to figure out what they had overpaid on duty and claw it back. They took off, started a company, and that's what they got their seed round to do. And finally, we had a woman in a test automation platform powered by AI. And again, we typically do not see a lot of women in what I would call the information technology area, which is, let's focus on developer tools. So this lady stood out with her no-code platform.
Hey, Don, there was a question you didn't see in the Q&A. Probably good to ask, mention it here. And David, you can chime in right with me here. The question about why aren't there more women-led founders, or is it more difficult or whatever? And just off the top of my head, probably not as many women-led founders because men have had more experience, sit on more boards, have more exposure, people more comfortable. I personally I'm investing in 4 women. I think they're outstanding. I mean, I think their time is coming, definitely. it's just harder to crack through a little bit because you invest with people you already know, and maybe I know investors like investors who have already have led startups before, and maybe women have led less. There's a whole bunch of reasons, but it's going to change over time and for all the right reasons. And people are absolutely leaning into strong women in leadership, and they're doing a great job. But it just takes time, like any societal change, unfortunately.
Yeah, and I would agree with you, Bob. But the good portion of the reason is societal. Um, Women don't have the number of role models to work with, the mentors to work with that are both they can look at are both female and in the upper echelons that they can aspire to. And when there are fewer out there, it just takes more time to
Just takes more
build
time, yeah.
that lower level that will eventually become the middle level, and some of those will become the top level.
But I've been involved with some women and companies I've invested in. Once you get into a conversation, and it has nothing to do with men or women, it has to do with capability, their knowledge, and so forth. And I find women to be work much harder and are much more thorough. But maybe they lose out on the global marketing thing and the contacts, all the people they know at boards, open doors. I mean, after all, a lot of CEOs are hired because of their networks and how they're going to drive, how they're going to raise, how they're going to raise capital and find major customers. And maybe that's, I don't know, but it's all part of the process,
And
all part of the
one
journey.
closing remark on that, and it goes towards the how many of these women who are in the ranks get funded. There are not a lot of female VCs. The investor ranks are heavily biased on the male side, and we're still human. There is still a uh, more willingness, whether it's unconscious or conscious, to invest in someone like yourself. So as you see more women come into venture, become angels, invest, we expect to see, again, that contributing towards more money going towards women-led companies.
Absolutely.
And speaking of VC, I've shown you this for the last couple of months. I don't have a new one to show you for 2025. Some figures, though, there are still the large funds raising more. This has not slowed down. Andreessen Horowitz just raised another in the Q1, another 500 million and a second 1 billion fund.
1 billion.
And that last year, Andreessen Horowitz by themselves made up 11% of all funding raised. You know, and that doesn't show signs of changing. What we do see happening, and we've seen more of it in Q1 than we did the end of last year, are smaller VCs, call them micro VCs. There's one, maybe two partners who raise a small fund. It may be only $10 million. I've seen one for $5 million. And we've seen more of those in the last 4 months, if you will, since the beginning of the year than we saw in the 4 previous months by a factor of about 2.5. So VC fundraising is still going on, money is still being brought in, and this is in spite of the fact that the venture capital firms have not exhausted their current funds, even those going back to as far back as 2019. There is still money that they have raised that has not been invested. So this is what I referred to as the dry powder, what the industry refers to as dry powder. Something like 1.7 trillion in dry powder waiting to be invested. And that's by PitchBook's estimates. So when we see a decrease in the number of companies being funded, uh, one, by 20%, I think we figured out from this month, from the average of the previous 3 months, which, by the way, first quarter fundings, 503 companies. So this month, 128. So the funding is not because there isn't money there to be invested. What there is in the last couple of months, 3 months, is that there is an increasing amount of uncertainty. Multiple VCs have said publicly that they are waiting to see how things around the economy, whether it's tariffs, whether it's interest rates, but there is uncertainty. And whenever there's uncertainty, business slows down. If you're not sure of what is going to be true tomorrow, next week, next month, for a certain group of companies, maybe a company you're looking to invest in, uh, are they going to be affected by the tariffs? Are their customers going to be affected by the tariffs? There's a variety, and it's just cascading um, from the basic what's happening and what's going to happen. So we're going to see next month if this 128, if we stay lower than we have, or if we bounce back and see a renewed level of funding. But uncertainty is playing a big part in what's happening right now. And of course, we're still sitting in a illiquid, if you will, environment. Illiquid being a lot of money on the level of 2.7 trillion in value now for private companies. These are unicorns, 2.7 trillion. That is basically locked up because the public markets are and have been for tech effectively closed. There have been a limited number of tech IPOs. There were 3 in the first quarter. One of those is trending 10, 20% up. The other 2 are 50% down, 80% down. And the public market used to be where the money got returned to the founders, to employees, to investors, and from investors to their LPs, who then reinvested and started the virtuous cycle again. That is not happening now. What we have had is a limited number of large acquisitions. In Q1, we had multiple billion plus acquisitions. April, we had 1. Ripple acquired Hidden Road. And Hidden Road is not a Silicon Valley company, but it still counts because there were lots of Silicon Valley VCs who invested in it. And we'll be getting money back from the acquisition. The only other acquisition of significance in April was Fictive, being acquired by a Japanese company, Misumi, for $350 million. Aside from that, we had 41 acquisitions with amounts undisclosed. And those amounts undisclosed acquisitions can certainly be because the companies want to keep it private. They're merging. They think it's not amounts they want to disclose to their competition. But it's also typical of when a company is, say, bailed out. They can't raise money. They're not profitable. Their only choice is to close down or sell to a strategic partner, a competitor, someone. So we watch those acquisitions closely and track the number as well as total dollars overall. Tech IPO market we thought was coming back, and one more company, tech company, Chime, filed early April, and just because of the uncertainty and general economy and what's happening, they announced they were putting that on hold. They were not going to move ahead now. They and many others are waiting to see when the right time to hit the IPO market is. Now, you may hear about IPOs, and we don't look at IPOs overall. We're specifically looking at tech IPOs here.
And Don, you can point out too that we have successfully avoided the SPAC market in the Bay Area, which we hate because we thought SPACs were going to be losers from the day we first learned about them 2 or 3 years ago. All we've seen is SPACs not getting funded, closing down, whatever. And so we review our nationwide stuff in the morning together. We breathe a heavy sigh of relief when unfortunately they're in Florida, Texas, and New York mainly, but they're not here, which we're happy about.
Yeah. You may know a SPAC as also being a blank check company merging with a private company.
Yeah,
blank check company is already public, and it becomes an easier way in the eyes of the private company to go public.
And it attracts a lot of companies, frankly, that are not ready to go IPO, that haven't dotted their I's and crossed their T's. Is that what I thought? Yeah, cross your T's and forge and go a little early, and consequently it backs up the food chain, and they don't work out. So it's not good.
Yeah. As a matter of fact, of the 3 companies that went public this year already, one of them was a SPAC, and that is the one that's down 80%.
Yeah.
SPACs just do not have a good track record.
We don't give investing advice here, but I would say avoid SPACs.
So in the absence of public markets, there are, continued activity in alternatives, and those alternatives from a company perspective, secondary market. You have companies like Forge Global, which specialize in, if you want to buy stock of a private company, they will see if they can make it available to you. This has actually now garnered enough business, enough activity, that Forge Global just cut a deal with Yahoo Finance, so that in the same way you can go to Yahoo Finance and look at a public market, public company price, and activity. Has it gone up? Has it gone down? Now Forge and Finance are going to do that with key private companies. So the secondary market is of interest, obviously, to companies that can't IPO but need liquidity. And why? Well, there's early employers, there's founders who expected to have some money out and haven't. And on the other side, you have investors who get caught for longer than they expected. An investment fund typically is 10 years. And some of these companies now have been private for 14 years. So there's definitely the ability on the secondary market to let off some of that steam and reduce the pressure to go public. And finally, continuation funds from a VC's perspective is sort of the same. It's basically a fund that they raise, and it's primarily to buy out existing investors in one or more of their companies, give the LPs some money back. So this is the new activity level around not exiting, but getting some money back for a variety of the people involved.
Don, did you already mention the slowness in the M&A market? Or am I sleeping here or not?
Yeah, I did mention that.
I was just going to say that even though it's slow, you can believe that every public company has a VP of Corp Dev, which is M&A, and they probably look at 500 companies a year, but obviously they're looking more carefully for those that are completely strategic fits. So maybe they may be going soft on things that are great to have. They want things that are must have. When they're must have, they're gonna find a way to get to acquire them.
Yep, absolutely. So let's see, wrapping up here, all this information comes from research Bob and I do as part of putting together the Pulse of the Valley, our weekday newsletter on fundings, on new companies, on people, on exits in the Valley and Northern California. And the Pulse of the Valley, you can get 2 weeks free on a trial. If you're an entrepreneur, we've got a great deal for you, a $7 a month subscription, because disinformation and keeping on top of what's happening in funding, who's doing it, where they're doing it, what they're doing it with, is important. And finally, just to wrap up on LinkSV, we are all about tracking people, capital, companies. That's business intelligence for the startup ecosystem. Not only do we do the weekday newsletter, we also offer pulse alerts, so you can get just the events you want in a real-time email. We've got an accelerator program. Berkeley Skydeck is one of our accelerators. Also, Bronco Ventures, and that's open to any accelerator program at no cost. We want to help their companies. We've got a fundraising platform using our database, and we have started a series of podcasts. Our first series is on, again, focused towards entrepreneurs, legal foundations, what you need to know from the time you start your company to the time you scale it and hopefully at some point exit. And with that, I hope we see you. Well, no, we're here. This is June. I believe it's June 6th, as a matter of fact. I obviously didn't update the slide. Shame on me. All right, David. Thank you, and back to you.
Thank you, Don and Bob. That was great. I think a lot to look forward to in the second half of the year. Before we go into breakout rooms, I did put in a few events. We're going to be kicking off our Gamma partnership on next Thursday. We'll have a weekly Gamma Power Hour event at 9 a.m. Pacific. We have some other great events coming. Those are just a few of them. Does anybody have any questions or comments before we go into breakout rooms?
Yeah. Could you tell us more about the fundraising support that was in the or the program? It was in the previous slide.
Does he mean the investor analysis report?
The do-it-yourself fundraising.
Yeah.
Vikram, how about if we connect offline on that? Can you leave me your email in the chat?
Yeah.
But Don, essentially, everybody's edification, you can put your keyword, put in the word cancer, come up with 65 companies we have in our database that have cancer, and we'll scale for you 700 investors who invest in the word cancer, and you can figure out from there companies for firms that you don't know that you'd like to get to know better and sort of help along that way. That's the skeleton version.
Yep, that does it.
Yeah.
Thank you.
And Vikram, do you want to just share who you are and where you're coming in from?
Yeah, sure. So yeah, my name is Vikram. I'm the founder and CEO of the Kuva AI. We are building an enterprise AI agent platform for the financial industry, mostly for the wealth managers and the banks, also investment banks. We have launched in during the Q1, and now we have like 5 signups from wealth management companies as also accounting companies, and now we have leads from the banks. So yeah, I mean, mostly we are focusing on the financial sector.
Welcome. Okay, good. Good to see you. I was stalling so I can get the breakout rooms ready, and we'll be back in 10 minutes.